Joining us right now to talk about this and much more is Stephanie Link. She's Chief Investment Strategist and Portfolio Manager at Hightower Advisors. She's also a CNBC contributor. And Steph, what we saw last week, those lower yields, saw the NASDAQ hitting a new high every day. I guess that's kind of nirvana from the tech stocks perspective to think that you could see lower rates while they continue to power higher from AI spending and such.
Yeah, I mean, look, we have a really great environment right now. The data in the U.S. is very favorable. The Atlanta tracker for GDP is running at 3.1%. Inflation is making progress. Initial claims to the job market remains pretty strong. And actually, the credit spreads are super tight. So all of this, you would think, because the financial conditions are fairly easy, you would think that you'd see a broadening out in the market. You're not really seeing it. As you mentioned, you're seeing it more focused on technology. That's the exciting part of the economy. But I do think you're going to start to see a broadening out once earnings come about, which we have to wait another couple of weeks. So, you know, we're a little hostage here to the macro in the short term, but I do think earnings are going to support other parts of this market doing a little bit better.
I had seen some statistics that suggest that a third of all capital inflows have gone into the U.S. market since the pandemic, that it has taken more than its share of the gains. But you wonder how quickly things could change. And if you look for an example, go to France, a 5% pullback on concerns with that snap election. You've got not just the far right candidate who's outpacing Macron, but the far left, too. Macron's party in third place, at least in the polling that they're seeing right now. And it's got a lot of questions about what happens and how politics really can have an impact on the markets, too. Right now, France has lost all of its gains for the year in its markets. Do you worry that we are prone to potential problems here with politics front and center, or do you think we're the beneficiary of any chaos that plays out in Europe?
Yeah, I think politics are always going to be creating a volatility in any markets because it's the unknown. The outcome is unknown. I do think, though, that sometimes when we do see this volatility, especially here in the States, I think it's an opportunity. I mean, I think that we have to step back, and whoever gets in as president, the more important thing in my mind is really the mix of Congress. And so we'll have to see how that shapes up. If you have, you know, an entire party that has the presidency, then as well as the two houses of Congress, that could be something that creates a lot more volatility. But I do think overall, Becky, it comes down to fundamentals and companies, what they're doing and how they're executing. And we have some amazing companies here in the United States with great transparency, which I think is super important. And so looking for opportunities, if we do get a pullback on kind of the political front, I think that's when you want to step in and add to positions.
What are you kind of chasing after, do you see as potential opportunities these days, Steph?
Well, I have one name that is so obvious, and that's Broadcom, but I have two other names that may not be so obvious, and that's Seagate and D.R. Horton. I mean, Broadcom, Becky, they're going to do $70 to $75 a share in earnings by 2026. And it's not only driven by AI, which is going to grow 35%. It's their non-AI businesses that are at a trough right now. And so I do think you're going to see upside, maybe 3-5% growth there. And the VMware is completely changing this company into much more of a software company. And that will help recurring revenues as well as margins. Seagate, I think, is a little bit off the radar screen, but we're starting to see from companies that the PC refresh cycle is starting to get some legs, or green shoots, if you will. If you listen to what Dell had to say, HPQ saw growth in PCs for the first time in 2 years. We also had AMD talk about their AI chips being 5 times as fast as their prior chips. And so you are going to see a whole refresh cycle, which I think is underappreciated. And Seagate is the leader, and they've got pricing power and margin expansion. And then finally, housing. I know everybody's really down and out on housing, but look what mortgage applications did last week alone. When rates fell 5 basis points, mortgage applications last week rose 15.4%. Can you imagine what we're going to see this week when rates are down 20 basis points last week? So to me, a super cheap stock.
That's a play, though, on the assumption that the Fed is going to cut rates at least once this year, right?
I mean, I think that the bond market's doing the job for the Fed, right? Because we have seen rates come down. I don't think you need rates to cut. I mean, I don't think you need the Fed to cut for the housing stocks to do well as long as rates are coming down. I'm in the camp of the Fed doesn't do anything this year. I don't think they have to because the growth in the economy has been so much stronger than expected. I'll take it if they cut rates, but I do think, though, that, I mean, look last week. As rates came down, the housing stocks did quite well. And as I say, they're out of favor and super cheap. So
there's been more volatility in yields, in Treasury yields, than there has been in stocks lately. I mean, the VIX is really tame, but the moves that we see in yields have been completely data dependent. Every time you get a good inflation reading, those yields come down. If you get bad inflation readings, they come back up. So that would be my only question. You're right, the bond market's doing the work for them, but I think it's data dependent too.
Absolutely, 100%. But I think we're a little bit more sensitive to the macro at this point in time because we don't have companies reporting earnings. And so as a result, we're kind of hyper-focused on the macro. We should be to some extent, but I think we have to step back and look at the economy as a whole. And we are doing pretty well in terms of growth. Inflation is certainly making some progress, maybe not what the Fed wants, but certainly making progress. And that's a good combination for earnings. I mean, that's what I care about as a portfolio manager.